It's not inflation on the mind of our headliner today. It's a word that a lot of people don't like to use when you talk about all this. Ed Yardeni is the president of Yardeni Research, and it's the S word, the stagflation word. You really worried about that today?
I think we're in it. Before the war, we had a lot of data suggesting that we were experiencing an inflationary boom. Inflation was high, but at the same time, I think there was a widespread consensus, and I agreed with it, that we'd see peak inflation maybe by March or April, and then we would get back down, not to 2%, but maybe down to 3 to 4%. But now, as a result of the war and what's happened with commodity prices, we're clearly looking at higher inflation, and peak inflation isn't going to be for a while. And then the concerns, of course, is that we get more wage price spiral inflation. It's getting to be a little bit of a deja vu with the 1970s all over again. Since the war, I think stagflation is the scenario that's probably most descriptive of what we're starting to see and what we'll see in the next several months, which is higher inflation than we thought before the war and slower economic growth.
That would be Jay Powell's worst nightmare.
Yes and no. And in some ways, he's gotten a reprieve here because I think he can stay behind the curve, well behind the curve of inflation, and argue that there are extremely complex geopolitical circumstances which raise a lot of uncertainty. And so the Fed, I think, will raise interest rates, but will do it very, very gradually and not just use the excuse, it's a good excuse. There are a lot of geopolitical uncertainties. This is not just a short-term geopolitical flare-up, as one of your panelists said. This is something much more concerning.
Sure, but then how are they going to deal with inflation? If inflation is going to remain elevated for many months ahead, therein lies the problem. He can't be as cautious or as reticent to raise rates because of these geopolitical concerns now if inflation is going to be worse than he thought.
Well, the last thing the U.S. needs right now is a recession. I mean, we need to have a relatively strong economy and get through this geopolitical mess so that we can be stronger coming out of this mess. But I think that Powell will use this as an excuse to explain why the Fed isn't taking a tougher stance. Look, I don't think there's much the Fed can do about inflation other than a Volcker 2.0. I mean, Volcker demonstrated that the only tool that the Fed really has to bring inflation down is to let interest rates rise to whatever level it takes to cause a recession, which then breaks the back of inflation. I don't see Volcker 2.0 coming out of this Fed.